Hello, my dear investor. I'm Edward from Yenda Security Hong Kong. Today, I'm going to talk and share another story for investment concept with my old friend, Dr. Yan. I know you've been very busy. It's very difficult to book your time, but I'm very happy he can share the story with us today. And today, what kind of market we're going to share with all the investors today is a very, very interesting market, but has been forgotten by most investors for more than 20 years. And it's Japan. Why Japan? Why we are going to talk about Japan? Because I'm sure all our investors know a very well-known investor, Warren Buffett, just shared his investment story to all investors back in 1 month's time. And that's back to 2020, Warren Buffett put a lot of money in Japan top 5 trading company, and which achieved a very remarkable return in the past 3 years. So that's the story, that's the interesting point we are going to talk about Japan market. And another interesting point is that if we really look into the market, we can see Nikkei has been breakthrough its record high in the past 1 month. And last time I remember when Nikkei tried to test the record high, is already 34 years ago. So that's the story why a very quiet and be forgotten market which raised the eyebrows for all the investors at this moment. Now I'm going to turn my presentation to Dr. Yan to talk about his story about Japan.
Okay, let me share with you my view on why should you invest in Japan. First, I believe that one key reason for investors to consider allocating a portion of your investment portfolio to Japan at present is because many investors are actually unknown about the second half of this year. Why? Let's take a look at this slide. This slide is a fund manager survey conducted by Bank of America Merrill Lynch. From the left side of this chart, it can be observed that professional investors currently hold a conservative views on the economic outlook for the later half of this year. Around net 65% fund managers say economic momentum will be worse this year ahead, and 60% think corporate profit will deteriorate. Next, and we also believe that economic conditions in the later half of this year will not be better than the first half. The main reason is lagging effect of contractionary monetary policy, which means that even the Federal Reserve stopped rising interest rate, the monetary environment in the later half of this year will still continue to be tightened. Why so? Because the aggressive interest rate hike by the Federal Reserve have already created a financial environment that is inverted interest rate curve and excess high short-term interest rate. It will bound to result in financial condition tightening. Because of this situation, deposit will continue to flow out of the banking system. Looking at the chart on the right, the blue line represents the current deposit interest rate in the bank, while the yellow lines represent the interest rate of money market mutual fund. It can be observed that interest rate of money market mutual fund is significantly higher than the deposit interest rate in the banks. As a result, deposit will continue to flow out of the banking system as depicted in the left-hand side chart. At this point, we need to question why the banks are unwilling to raise their interest rate, their deposit interest rate, to match the level of the yellow line. The reason is that the yield curve is negative. This causes the interest rate that banks receive from their assets to be much lower than the short-term interest rate. when deposits flow out, let's consider the potential change in a bank's balance sheet. Typically, deposits are the largest liability item on the bank's balance sheet, and the size of assets and the liabilities should be equal. If deposits are being withdrawn, assuming the bank does not want to reduce its asset size, it will have to borrow money from money market mutual fund and the money market at very high short-term interest rate. This would result in losses for the bank. Therefore, a more reasonable approach would be to reduce the asset size, which implies tightening financial condition. Indeed, when short-term interest rates are high and the yield curve slope is negative, we can expect a more severe tightening of credit condition to occur. Next, also, because fund managers are all well aware that the tightening effect of funding will lead to a deteriorated economic outlook in the later half of this year. They have been relatively conservative in their investments so far. As can be seen from the left side of this chart, fund managers' risk exposure of current investment portfolio are lower than the long-term average. And the right-hand side chart, cash allocation in their portfolio is higher than the long-term average. Next. However, it is evident that the recent market performance has shown resilience compared to many fund managers thought. It leading to a fear of missing out, that means FOMO, among them. It resulting in a forced increase in equity holding this month. Nevertheless, these fund managers still have concern about the economic outlook. Therefore, they are allocating their new holding to certainty trends. What is certainty trends? Certainty trends means investment do not rely on expectation of better economic outlook, better economic condition in the second half of this year. But this has created another issue, which is the technology stock have become crowding trade. Next. In fact, more than 19% of year-to-date gains in U.S. stock market have come from the 7 major technology stocks. So, what should we do in this situation? I believe adopting a barbell strategy is the way to go. In fact, I think it's not wrong to pursue stocks that represent certainty trend during irrational exuberance because they tend to be perform well in such periods. However, it's crucial to control risk. So how to control risk? Barbell strategy. What is barbell strategy means? You have to overweight position to both cash and short-term bond. By holding cash and short-term bond, you preserve purchasing power and ensure that you have the ability to buy stock at lower price when significant market decline occur. At the same time, you can overweight assets that are part of certainty trend, allocating more funds to those assets. On the other hand, you can underweight assets that rely on assumption of better economic condition in the second half of the year, such as cyclical stocks. Next. However, the current issue is that since technology stocks have already become crowded trade, although crowding does not necessarily mean the stock price of technology stock will decline in the short term, but it does indicate an increased level of risk. Besides technology stock, besides the technology stock, what are the certain trends that have already occurred in the world, but are not so crowded? I believe that the Japanese stock market is a market you cannot afford to miss. This chart, it can be seen that foreign investors have already noticed Japanese market. So foreign capital influx into Japanese stock is starting. But you can see from the red line that compared to the historical foreign capital inflow, the current level of foreign capital flow into Japanese stock market is not crowded. Next, today, I would like to share with you 5 reasons why I believe that Japanese stock market is one of the few certainty trends in the world right now apart from technology stocks. Next, first, Japan is the country least afraid of rising interest rate. This chart represents the net debt of listed companies in Japan, which refer to debt minus cash on the hand. It can be observed that currently, Japan-listed companies have a relative healthy financial structure. Their cash holdings are even greater than their debts, indicating that Japanese listed companies are not afraid of rising interest rate. Next, second, undervalued yen should revive made in Japan. In the past, Japan has faced the challenge of having a strong Japanese yen, which has resulted in a lack of price competitiveness for Japanese manufacturers. This can be observed from the chart on the left, where the blue line represents the exchange rate of Japanese yen divided by purchasing power parity exchange rate. When the blue line is below 1, it indicates that the Japanese yen is too strong and the Japanese manufacturer lack price competitiveness. But you can see from 1990 to 2013, Japan remained in this state. But this had led to continuous decline in Japan's share of global export, as shown by the red line. However, this situation changed after the introduction of Abenomics. As you can see, the current exchange rate of Japanese yen has actually significantly depreciated, and the blue line has already exceeded 1. It indicates that Japanese manufacturing is now very competitive. Actually, we can gauge the level of price competitiveness in Japanese manufacture by looking at another indicator, which is per capita GDP. You can see from the chart on the right that due to the significant depreciation of Japanese yen, Japan's per capita GDP is now comparable to that of Taiwan, to that of Korea. However, we all know Japanese manufacturing quality is superior to that of Taiwan and Korea. In other words, currently, we can obtain the quality of Japanese manufacture at cost similar to the Taiwan and the South Korea. This is definitely a competitive advantage. Next, third, Japan is the core of trusty supply chain. If you believe that decoupling between the United States and China is a definite trend, then Japan is definitely a key player in this trend. Why? Please take a moment to consider the significance of China to the United States. It is primarily associated with manufacture. Therefore, the coupling between U.S. and China implies that the U.S. will need to find alternative manufacture source. So, you can see in the context of decoupling between the U.S. and China, it is true that the United States cannot solely rely on domestic manufacture to meet its demand. as American workers may not be willing to work under the same condition as China workers. Therefore, in this decoupling scenario, the U.S. must find a way to establish a new manufacturing supply chain in China, in Asia. Japan is indeed a crucial partner for the United States, as it is currently the only country in Asia that complements the United States in the high-tech sector. Additionally, Japan has established a strong presence in manufacturing supply chain in Asia. The chart on the left displays the ranking of countries based on their competitive advantage in high-tech sector. It can be observed that the U.S. has a competitive advantage in computer technology, in digital communication, and medical technology. But on the other hand, Japan may not only excel in computer technology like the U.S., but also have superior to two areas where the United States lack proficiently, namely machinery and measurement. Therefore, Japan complements the United States in terms of high-tech capability. Moreover, from the chart in the right, Japan's deep-rooted presence in Asia manufacturing supply chain provide valuable opportunity for U.S. by leveraging Japan's established network. The U.S. can tap into existing infrastructure, existing supplier relationship, and the regional trade agreements. This can facilitate the establishment of new manufacturing supply chain in Asia, reducing reliance on China and diversifying source of production. Next, one more reason I consider the most important is inflation. The chart represents the distribution of financial assets among households in Japan, in US, and in Taiwan. You can see that the Japanese household hold 55% of their financial assets in cash. The main reason for this is the prolonged period of deflation in Japan. People do not need to engage in extensive financial management. They could preserve their purchasing power by adopting the most conservative saving method. Therefore, the majority of the financial assets held by Japan's household are in the form of deposit. However, with economic shifting Japan from deflationary era to an inflation one, people's investment habits are expected to change. Holding cash will no longer preserve real purchasing power. Therefore, it can be anticipated that Japan's household will enter an era of portfolio restructuring. They will increase their allocation to stock, that because equity can hedge against inflation. Next, of course, under the backdrop of Japanese stock market reaching a 33-year high, investors are naturally concerned about whether the current valuation is too expensive. However, I believe that it is not the case, as can be seen from this chart. Whether you employ more complex valuation method or a simple one, the valuation of Japanese stock market is still considered reasonable. It's a fair value that does not exceed size of bubbles such as in US. So, in summary, in the uncertain economic outlook for the second half of this year, I believe investors should adopt a barbell strategy. This means overweighting cash over short-term bond while also overweighting certainty trend. Currently, one certainty trend in the market is US technology stock such as AI. However, I believe that apart from technology stock, Japan is also a certainty trend that should not be overlooked. Thank you very much.
What a wonderful presentation by Dr. Yan.
Thank you.
Very impressive for his story about Japan. Now it's about very interesting time. I'm going to ask him some questions and to refresh all of your memory. So the first question will be, will Japan going to lose its monetary policy? Because the yen is always a key point when investors looking into the Japan market. So will yen to be strengthened again? What do you think the current prime minister, will he change his monetary policy in the coming years?
Okay, that's a good question. Let's first clear the idea. I don't think monetary policy is really concern for all investors, because just like what I have already said in the presentation, right now Japanese yen is very price competitiveness. You see, in our PPP slide, Japanese yen divide PPP purchasing power parity is around 1.4. That means Japanese yen has already 40% price competitiveness. It means even if Japanese yen appreciate around 20%, 30%, it still has really good manufacturer price competitiveness. So first, I want to say, even Bank of Japan changed his policy. Japan manufacturer in Japan, made in Japan, still have competitiveness first. And second, let me give you some prediction about me. I don't think Bank of Japan will change his monetary policy in the coming year. Why? In May, Bank of Japan have already said in next year and the next 1 half, they will do a monetary policy review in the coming year. That means in the coming year, if economic outlook don't change a lot, Bank of Japan will still maintain their monetary policy. So I think investor should not worry about Bank of Japan change their monetary policy. But the most important thing is even Bank of Japan change his monetary policy, made in Japan still have a lot of price competitiveness.
Thank you, Dr. Yan. Now we understand even the yen in the long term still have, it could be rising a little bit from here, from this point, which is around 140, right?
Yeah.
But Japan market as a whole still be very competitive. They can try to use their integration to production to improve the production process, which can make their more efficient when they do the manufacturing.
Yeah.
So that's the key point for the yen issue here.
Yeah.
And here's my second question. As we know, Nikkei has already been rising 20% this year.
Okay.
So when looking at investment, the valuation is always a key point.
Okay.
So I want to ask you about the valuation key points that will this be too expensive for investor to jump into the Japan market? And what is the current price to book or PE ratio for Japan market as a whole?
Okay. Just as I have already said in my presentation, right now, Japan's market is not really cheap. It's not really cheap. But it's not really expensive also. Just as my chart in the valuation slide. Right now, in more complex method, Japanese valuation is around the fair value. But as for some very simple metric like PE ratio, Japan's stock market PE ratio is around 18. 18 is the same with Taiwan, is the same with United States. And the PB ratio is around 1.6. It's lower than US market. S&P 500 PB ratio is around 2.6. So I think investing in Japan is not really crowded and not really too expensive. And it is also a certain trend. So you can use fair price to invest in Japan. You can use fair price to invest in certain trend. That is Japanese market.
Understand. So in terms of valuation and compare with other peer market in Asia, Japan is still very cheap from Dr. Yan's viewpoint. And here's my last question is that, you know, I'm an investor. Now I have very good interest to invest in Japan, but what can I do? What kind of investment tool I can choose from? So what is your investment? What is your suggestion to an investor when we try to jump into the Japan market?
Okay, we can follow Abenomics logic. Okay, what is Abenomics market logic? He won't depreciate Japanese yen. If Japanese yen depreciate, they will regain their price competitiveness. So made in Japan will be the first driving engine of Japan. So first, you have to invest in made in Japan. That means manufacture sectors. And then after Japan regain their price competitiveness, they will let investment, I mean fixed investment, not financial investment. Fixed investment will be increased in the later part. So after you invest in made in Japan, then you will invest in investment sector. And then finally, when investment going larger and larger, they will hire more workers. So domestic sector, domestic demand will follow. So there is 1, 2, 3 step. First, invest in manufacturing sector, that is made in Japan. And the second, invest in Japan, investment in Japan, fiscal investment. And lastly is domestic demand, Japan consumer. So 1, 2, 3 step. That is what I suggestion. And the other part, the other logic is if you believe the coupling between U.S. and China is a trend, then how to reestablish the supply chain in the future? United States, United government will need Japanese conglomerate trading companies' help to restructure this new supply chain. So you can follow Warren Buffett's logic, invest in some really large trading company, conglomerate, such as Mitsubishi, such as Mitsui, such as Sumitomo, etc. Thank you.
Thank you, Dr. Yan. He also mentioned about the name we are going to invest. Just he forgot to talk about the ticker of the underlying company. But we know the concept now is try to focus on the manufacturing of Japan. So this empire has been very well known in the past 2 decades. You know, made in Japan is always a guarantee about the quality and very robust, maintenance. You can use this kind of product for more than 10 years. And that's what we know about Japan. So now Japan, made in Japan, Japan manufacturing will going to be another very important driver for the next 10, maybe 20 years for Japan economy.
True.
So as an investor, we are here. We have a very good presentation about the Japan market, about the Japan story, and also about the Japan outlook. So what are we waiting for? As an investor, just try to explore more opportunity and don't make your money stupid. Just try to invest Japan. That's the story we're going to share today. So thanks for Dr. Yan's time.
Thank you.
And we are going to see you again. Thank you. After listening to such a wonderful presentation for the Japan story by Dr. Yan and Yuanda team, my dear investor, you must agree with now to investment in Japanese market and eager for it. I'm going to make introduction of the relevant investment tool in the Japan market, which includes stock, bonds, structured notes, mutual fund, for you to make appropriate asset allocation based on your own risk attribute and expect returns. Please expect my brief introduction for asset allocation and individual investment product. In the part of asset allocation, you can flexibly use and match different investment products according to your own views on the Japanese market. Generally speaking, stocks are investment products with relatively high volatility, and the general expected rate of return is around 10%. As we know, Japan market this year is pretty much very amazing. Nikkei index has risen by 20% this year, compared with the bond market, which is currently enjoying 4% in terms of IG bonds. As for structured note with an equity structure that combines blue chip land and bonds, which is around 6 to 8%. If we're looking at the most conservative product, which is principal guarantee note linked to exchange rate, for this kind of structured note, the return is around 4 to 6%. After knowing the expected return of various investment products, you can flexibly match various investment products to meet your requirement for expected return according to whether you are conservative, stable, or aggressive. In this page, we try to sort out several famous large stocks in Japan, such as Toyota, Sony, Hitachi, and Warren Buffett's 5 major trading companies. This table provides you the stock code, current reference market price, market value, P/E ratio, past 1 year high and low point of the stock price, and the market target price for your easy reference. You can choose the industry you are interested to invest in Japan. After learning about the names of large Japanese stocks, now we'll try to do something more complicated. We can further make product packaging for this blue chip stock portfolio to form a structured note. Let's take FCN as an example. FCN has been very popular in the market in recent years. FCN is a potential design to receive stock lower than current market price after a certain period of time, and you can receive fixed cash return in a monthly basis. Investors can avoid the risk of chasing stock high. At the same time, they also have downside protection and stable income. If you are an investor who want to participate in the Japanese stock market but are worried about chase high, you can choose FCN. Besides, FCN can also link to multiple Japanese stocks at the same time. For example, you can link Warren Buffett's famous 5 major trading companies in the meantime under FCN. Is it a great design? FCN itself also provides yen and dollar denominator for you to choose from. In part of Japanese bonds, we have also stacked several short-term, middle-term, and long-term Japanese issuing companies with different industry exposure. All of these bonds, their credit rating are IG. The current market return for these bonds are generally around 5%. As an investor, you can choose based on your own preference. Finally, let's talk about a mutual fund. If you don't know how to invest in Japanese stock market but want to participate in this growing market, mutual fund is always a good choice. Mutual fund will be an appropriate choice if you don't know how to put your equity exposure in Japanese market. Here, we recommend the new launch Yuanda Japanese Leader Funds. The fund itself focuses on the 3 major business opportunities relevant to Made in Japan concept, which include Japan's precision industry, advanced technology area, and very famous for their cutting-edge medical industry. Yuanda's professional team will help you to choose stock and make capital allocation to participate in this big development opportunity in the Japanese stock market. All above introduction of each investment product in Japan, investors are welcome to contact us for any inquiry about investment product. You can contact investment team of Yuanda Hong Kong, and we are ready and be glad to help you to provide the most appropriate advice and service for enter into Japanese market. Thank you for your listening.